All right, if you're watching markets right now, you probably felt it before you even saw the headline. Something snapped. Silver didn't just creep higher, it went vertical, and the timing matters. This just happened. Donald Trump announced a 25% tariff on South Korea, and within hours you could see capital moving like it smelled smoke. The real trigger here isn't speculation, it isn't some Reddit frenzy, and it's definitely not random. It's a structural shock to the global trade system. Stay with me because I'm going to show you why silver is reacting this fast, why this move caught a lot of professionals off guard, and how you can recognize this pattern the next time it shows up before the crowd does. If you're watching this right now, you're ahead of most people who are still trying to figure out what just happened. Now, before I explain what caused this specific move, let me teach you something most people miss about markets. Prices don't move on headlines, they move on stress. When stress enters the system, money looks for exits and shelters at the same time. Think of the global economy like a massive factory floor. When trade is smooth, parts arrive on time, costs are predictable, and confidence stays high. The moment tariffs show up, that assembly line starts to stutter. Costs rise, delivery times stretch, and suddenly nobody trusts the timetable anymore. That's when certain assets wake up. Silver is one of them, because it lives in two worlds at once. It's money and it's machinery. When the system shakes, silver feels it from both sides. It's not just sitting there waiting for someone to tweet about it. It's embedded in the actual mechanics of how the modern economy functions. So what does that tell us? It tells us that silver's reaction isn't emotional, it's mechanical. And if this is making sense so far, drop a comment below and let me know what you're seeing in your own research, because I want to hear what patterns you're tracking. Here's what's actually happening, step by step. Trump's 25% tariff on South Korea isn't just a political statement. It's a direct hit to supply chains that touch autos, electronics, pharmaceuticals, and heavy manufacturing. When you tax imports that deeply, producers don't just absorb it. They can't. They pass it on. Prices rise, margins compress. Planning becomes guesswork. So the primary driver here is cost shock. Companies that rely on South Korean components, and we're talking about major sectors here, they're suddenly looking at a 25% increase in their input costs. That's not a rounding error. That's a fundamental change in how they price their products, how they forecast earnings, how they manage inventory. And when costs jump like that, it ripples. It doesn't stay contained. It spreads through the entire production chain until it hits the consumer, the investor, the currency markets, everywhere. But there's a second layer here, and this is where it gets really important. The secondary confirmation is confidence shock. Investors see a shift away from cooperation and toward leverage-based trade policy, and they start questioning the stability of the entire system. It's not just about one tariff. It's about what that tariff signals. It signals unpredictability. It signals that the rules can change overnight. It signals that international trade, which has been relatively stable for decades, might not be as reliable as everyone assumed. And when those two forces collide, cost shock and confidence shock hitting at the same time, industrial metals that also function as monetary hedges light up. That's silver. It's used in solar panels, electronics, medical equipment, and it's also something people run to when trust starts cracking. Here's what's wild about this. Silver doesn't need hype when fundamentals line up. It just needs pressure. It needs the conditions to be right, and then it moves. You don't need a celebrity endorsement. You don't need a viral campaign. You need structural stress, and that's what we've got. But here's the part that should make you nervous if you're ignoring it. This isn't happening in isolation. It's happening as debt levels are high, as currencies are fragile, as global trade is already strained. This tariff just added fuel to a fire that was already smoldering. The system was already under stress, and now there's another shockwave moving through it. Now let me show you why this pattern matters. This is the exact same playbook we've seen before. Every time trade friction escalates suddenly, silver doesn't whisper. It shouts. Look back at the late 1970s when trade tensions and inflation fears overlapped. What happened? Silver exploded. It went from under $5 an ounce to over $50 in less than 2 years. Same pattern. Economic stress, monetary uncertainty, and suddenly silver became the asset everyone needed to own. Look at the early 2010s when confidence in monetary policy wobbled after the financial crisis. Silver surged again. It doubled in less than a year because people stopped trusting central banks to manage the recovery smoothly. Even more recently, during the last major wave of tariff threats and supply chain disruptions in 2018 and 2019, silver outperformed expectations fast. When you zoom out, you see the pattern clearly. Silver moves hardest when economic stress and monetary uncertainty arrive together. It's not a coincidence. It's a mechanical response to specific conditions. The larger story here isn't a single tariff. It's a regime shift, from collaboration to confrontation, from predictability to leverage. We're watching a transition from a global trade system built on cooperation and long-term agreements to one built on short-term leverage and policy uncertainty. And markets hate uncertainty. They price it in through volatility, through capital rotation, through safe haven demand. Silver sits right at the intersection of all of that. Now let me be skeptical for a moment because I want you to hear independent thinking, not just hype. Could this reverse? Absolutely. Markets overshoot all the time. Could silver pull back if trade rhetoric cools or negotiations reopen? Of course. And yes, there will be people saying this is all manipulation or speculative froth. Here's the thing about those arguments. They don't explain timing. They don't explain why silver reacts specifically during trade shocks. If this was just manipulation, you'd see random moves disconnected from fundamentals. If this was just speculation, you'd see massive volume spikes without any underlying structural change. But that's not what we're seeing. We're seeing a measured, consistent response to a specific type of economic stress. Focus on what you can control. Watch behavior, not opinions. Watch how price responds to stress, not how loud the commentary gets. Don't get distracted by the noise. Pay attention to the signal. Now, there are probably 3 types of people watching this right now. First, you're already holding silver and you're wondering if this is the big one. You're sitting on your position, you've been patient, and now you're watching price move and thinking, is this it? I get it. Here's my advice. Don't anchor to a number like $135 or $150 or whatever target you've got in your head. Anchor to conditions. If trade pressure expands, if more tariffs come, if the confidence shock deepens, silver stays supported. Your job isn't to predict the exact top. Your job is to watch the conditions that are driving the move. As long as those conditions persist, the move has room. When those conditions change, reassess. Don't marry your position. Marry your analysis. Second, you're on the sidelines thinking you missed it. You're watching this unfold. You're kicking yourself for not buying 3 months ago, and now you think it's too late. Listen, you didn't miss the lesson. You might have missed this specific entry, sure, but the lesson is still there. Watch how silver behaves on pullbacks, not spikes. If this is a real structural move, silver will consolidate, it'll pull back, and it'll give you another opportunity. Don't chase the spike, wait for the reset, and use this time to understand why it moved. That understanding is worth more than any single trade. Third, you don't care about silver. You care about macro signals. Good. This is your canary. When silver starts acting like this, it's telling you stress is leaking into the system. It's telling you that something in the global financial machinery isn't working smoothly. You might be watching currencies, or bonds, or equity volatility. Whatever you're watching, silver just gave you advanced warning. Different strategies, same principle. Pay attention to the message, not just the price. And here's what I want you to answer in the comments. Which category are you in? Are you holding, waiting, or watching from a different angle entirely? Because understanding where you are helps you make better decisions about where you're going. So here's where I stand. I'm not chasing hype, and I'm not dismissing fundamentals. I'm watching 3 things closely. First, I'm watching whether additional tariffs expand beyond South Korea. If Trump announces tariffs on the EU, on Japan, on other major trading partners, that amplifies everything we just talked about. That takes cost shock and confidence shock to another level. Second, I'm watching how industrial demand forecasts adjust in the next data cycle. Silver's dual nature means it needs both monetary demand and industrial demand. If industrial demand stays strong despite higher costs, that's bullish. If it weakens, that complicates the picture. Third, I'm monitoring how currencies respond to rising trade friction. If the dollar strengthens aggressively because of safe haven demand, that can cap silver's upside temporarily. If the dollar weakens because trade wars undermine confidence in U.S. policy, that's fuel for silver. Based on my analysis, this tariff move was structural, not emotional. The fundamentals aren't breaking. They're validating the move. We've got cost shock, confidence shock, and historical precedent all pointing in the same direction. If history rhymes and silver continues to react to trade stress the way it has in the past, the move that follows could be significantly larger than what we've seen so far. But I want to be clear. I'm not a financial advisor. This is not financial advice. Do your own research. Verify everything I've said. Challenge it. Test it against your own analysis. That's how you build conviction. If you made it this far, you're the kind of person who thinks critically instead of reacting emotionally. That mentality will serve you well, not just in this trade, not just in silver, but in every market decision you make going forward. If this analysis helped you understand what's happening, hit that subscribe button. Share this with someone who's trying to make sense of what they're seeing in markets right now. The more people who understand these patterns, the better decisions we all make. Stay sharp out there. Think critically, verify data, and make your own decisions.